can you hear me loud and clear? If yes, give me a thumbs up. All right, give me a thumbs up, guys. You can hear me? Good. Give me a thumbs up. Okay, guys, thank you for waiting for today's MAO. All right, every Monday, Wednesday, Friday, we will have our MAO. All right, and you'll be on Trade with the Boys Public. All right, so everybody can watch it. Then occasionally, okay, if let's say there's a reason for it, then we may do a Tuesday or Thursday. All right, if the market situation really calls for it itself. Okay, only if the market calls for it. If not, Monday, Wednesday, Friday will be the fixed timing, unless I'm sick, of course, or I'm engaged with something else. If not, it's fixed. Okay, timing wise, it's always about 11 a.m. around there. Unless I got things to do in the early morning, then of course it's 10 a.m. But majority will be at 11 a.m. Now, of course, occasionally because of running errands and stuff like that, it will be at about now like 11:30, 11:45. So I apologize on this, okay? All right, once again, today MAO is going to be very, very impactful. There's a lot of stuff we need to go through today. So kindly get your friends to come in right now, and then we enjoy this MAO together, all right? The information today is really impactful, yeah? Because tonight is going to be the very make or break. Yeah, I use the word make or break, all right, okay? It's really the make or break tonight, yes, indeed. Tonight itself, right, it will be the CPI data, and this data is very crucial. Now, of course, it's not very big as in like NFP, but because now this could be the last straw or last saving grace for the stock market, especially for the bulls. Because if the CPI data is a bit lower, the market will take onto this opportunity to buy, and the short sellers will take this opportunity to, cover a position, or maybe get short squeeze. So that's the reason why you can see today's market now, as of this morning, there's some buying. And that's the reason why yesterday we have been asking traders to take some profit along the way on the short side and consider to lighten up towards the CPI data tonight at 8:30 p.m. Okay, so tonight CPI is going to be very important. It's going to make or break. All right. So just start the morning right now, guys. You are about 37 of you. How many of you think that today's CPI data will be make? Make means, right, is lesser. Make means is lesser than the 8.5. They look at 8.3 today or 8.2 around there. Or you think that this CPI data will be much higher than the consensus, then that will break the market. So how many of you think it's a make? Make means you are on the long side. Break means you're on the short side. Come on, guys, give me your answer right now. I want to see what you're going to write for me. I want to see the consensus over here. This will be very interesting. All right. What do you think? Will the market make or break today? Good. What do you think? What do you think? Come. Give me your answers right now. All right. Make or break. What do you think the answer will be? Okay, I want to hear you guys right now. Share with me your views. All right. So what we have here, we have we have Liu, what's X make lah? Okay, Anthony says break, Desmond break, Richard say make, Daniel make, Ellison say it'll be quite close. I kind of agree with that in a way. This Louis say make, take a look. Chukit say make break, sorry. Jason say make, Norman say make, Janet say make, short then long. Okay, then Johnny say make, Ian say break. Okay, so what's my view for today? if you really ask me itself, right, judging from what I'm seeing right now, okay, the number should be about 8.2 to 8.3. So which means that it will likely be along with the consensus, which means that the market will like it initially. Yeah, the market will like it initially. But the point is this, 8.2 or 8.5 or 8.6 is still 8. So which means that the CPI data is still high. So to me, it's all right. This is just only it's just a smoke screen the Wall Street trying to do to make you confused. Now, what happened if the data is beyond the consensus? That means that it's 8.7, 8.9, or 9.0. Oh my goodness, then the stock market will just jump down today. The stock market will just jump down today. Okay, this one you must pay attention to detail, yeah? Okay, so this is something that to watch out for. So no matter what you do today, if you have position right in the market, no matter how, consider to lighten the load a little bit. Okay, I give you a simple way out here. Now, if you see, if I'm a short seller around, the market been down by 10 to 15% from the all-time high, right? If you were to actually consider to hold this short position to CPI, and you hope that CPI will be higher than expected, what will happen is that, right, if the data really is let's say lighter than normal, there will be a big short squeeze on the short sellers. So the market will just jump and go very fast, and then you get hit. All right, you understand the point? Now, if the data is bad, of course you make a lot of money. So, but then risk-reward ratio, you can consider doing this. If the data is actually bad, if you lighten your load before the data come out, even though the market may slam down because of the bad data, but the market will rebound, right? Generally speaking, you can from there again short again towards a certain figure. All right, then it makes more sense. The risk is much lower. You can chase it downwards. But if you actually get short squeezed by the boys, then you will lose a bit of capital. Then after that, the market may go, don't know how high it will go, and then turn down. So that is my point here for all the short sellers here. So you can consider to lighten your load before tonight's CPI data. Then if the data is really bad, go back in again and short. It can't be too late, right? So clear, everybody? If you understand what I just say, is all right. Can you key the word good risk management? That means that, right, I want you to understand that the last 3-5 minutes I'm sharing is about good risk management. Now, trading is about risk management. As long as you manage your risk and your system can deliver the package, I mean, you can't win every time, but overall, you should be able to see some success. All right, now recently, it's all right, we've been advocating risk management very ardently, and I think that students finally are able to see the importance of it, and of course, they are making money right now. This is a very important thing. We do not speculate. We do not try to say that, oh, market is at the bottom now, oh, market is going to crash now. We don't do all these things. We tell you exactly good and fact and figures. Then you just basically consider and weigh it in between. That is the way to become a good trader, okay? So that's why I say we practice good management, good risk management. Okay, thank you very much, Johnny, Norman, Allison, Anthony, Sharif, Daniel. All right, thank you very much. Thank you. All right, so tonight definitely is a make or break. Now let's go back to our picture here itself. So the CPI data is over here on this side. Now, of course, we know that now Elon Musk wants to ban Donald Trump. Now, Donald Trump was banned from Twitter, right, during the last election. Okay, it was very uncalled for, honestly. But again, luckily, they did it, because if they didn't do it, right, definitely they lost, definitely for the Democrats. I'm pretty sure of that. So now the thing is, will Donald Trump come back to Twitter? That's a big question mark, because the last time he said no. Okay, let's see whether this time around what will he say. Then of course we have this Cathy Wood. Cathy Wood recently get pretty upset with the Federal Reserve, the way they're hiking the rates, and she's quite sure that by hiking rates will kill the economy, which obviously is very bad for her, because her investment, majority of them are all the so-called high gearing counters. And of course, when the interest rate goes up itself, right, it's definitely going to be very heavy for her portfolio, which obviously you can see now, innovation is down by 45%. My goodness, this is pretty bad, right, for ETF. Okay. All right, so there will be lots of information coming in today. So stay tuned, get a pen and paper and a handphone. Let's go. Hi, Kai. Good to see you all the way from Germany. All right, so once again, disclaimer apply as usual. My job is to give you my stand and my position and my direction. You do your own risk management and you trade according to plan. Okay. Now, Wall Street joke of the day, it looks like a zero to me. Yes, indeed, right? A lot of people are feeling, the average Americans are definitely feeling the problem, the inflation, but certainly it's not seen by the what they call the Federal Reserve. Apparently to them it's all right. They feel that, okay, there's some inflation, but it's still not so bad. Okay. So you can see now, right, Biden as a president is saying that the rising US inflation is a main economic political challenge for Biden, right? He is definitely feeling it because his rating is going down while inflation is going up. So to him, he says really US inflation top domestic priority, all right? And interestingly, the crude oil price went below $100 ahead of the US inflation figures, which is today's CPI. Now, I was just telling my friend 2 days ago, I said, look, the crude oil will go down. He said, why? He said, if you actually look back at the chart, right, every time when the CPI is around to present itself, you notice that the crude oil price will go down by its own, right? Don't you feel that way? Twice already, it have been like that. Why? Obviously, it's all right, when you pump in so much supply of crude oil into the system, naturally, the supply will overwhelm the demand and definitely price will come down. All right, but is it like, will it help anything? No, it won't help because all this CPI data is like not last minute they do it. They calculate it over a month. So to me, this is more like a Wall Street thingy. And I tell you this, my friend, I'm going to put it on wording right now that I still think that crude oil is going to go up. Okay. Now the crude oil is about $100, right, as of now. Okay. I believe crude oil will go to 102 first to begin with for today. Then after that, right, I'm still looking to go to 109 again. Yes, the chart basically says that. All right, so to me, this is still a buy. And yesterday, it's all right, the OXY, the Occidental Petroleum, the earnings was pretty okay. The stock wasn't doing that well, stay about 59, 60 area, but it's fine. Long-term positioning, yeah, okay. So with all this inflation thingy, right, you can see now the US inflation now is at 8.5%. This is definitely the highest since 1981. That's what, 2 years after I'm born. Okay, so they keep on saying that it was a war in Ukraine that drove the energy cost. But we all know that the fact is that the crude oil price went up over here. Yes, indeed, undeniable. But prior to that, right, the crude oil price has already went up by more than 30%. So I don't really buy this up. It is the money supply that was really blanketing the entire economy. That is what is happening right now. But nonetheless, it's 8.5, and I suspect that it will drop a little bit because we do see some of the normal stuff like housing, like vehicles or secondhand vehicles are coming down a little bit. So that's why I suspect that the number will be down by a little bit. Yeah, but then it's still 8%, right? So that is still a problem. Okay, and the thing is this, consumer now are definitely more worried than not. In fact, now, right, consumer that's earning about 100,000 are more worried than last year. In fact, last year itself, right, people who are earning lesser, they are not as worried. In fact, now people who earn a little bit more are worried because of inflation. There's a problem here. And of course, now nearly 9 out of 10 adults are interviewed this year in February. They are very concerned is inflation. My goodness. So inflation is a top priority. So now the thing is this, even the number tonight, CPI data can be like 8.1, 8.2 to just make Wall Street happy, right? Just be mindful that, right, it's still 8%. And of course, if this thing continue, it's not the peak, but it could just only a pullback for another higher level to go. That's why, to me, this is actually a dangerous time. All right. So that's the reason why in April, yesterday during MAO, I told you I will dig this out for you, right? Remember? I told you, right, on 7th of April, which is just last month, right, there's this former New York Federal Chief Dudley. He says this, Federal Reserve must inflict more losses on the stock market investors to tame inflation. Yes, I really reminded you guys that the only way to tame inflation is to take away or at least to reduce the current situation in the stock market. And of course, after that, on May the 4th, more update came in. Stock market sell-off is exactly what the Federal Reserve wants, say by the New York chief, ex-New York Federal chief, all right? And of course, Bloomberg now has said that does the Fed have to destroy the market in order to save it? And I told you the answer is yes. So all these are not like I created as a, like a header and stuff like that. All these are actual fact and figures that we actually can see for ourselves. And definitely this is the direction that the market is heading for time being. So now what do we have for the fear and greed index? We're at 23. Now, remember I told you, right, when the number comes down to a lower number, like example like this, I like. So now at 23 is still not the best figure in my opinion, right? The last one was about 16 and the best one is about 12, okay? Now, if any time the fear and greed index go to 12, buy, okay? Buy. All right, if let's say we do see 12. All right, now, but of course, this buy is going to be temporary. It's probably going to be transitory. So that's why as a trader, you just take notice of that, okay? Of course, you can, if you want to buy right now, why not? Okay, but then again, I would say that go slow, yeah? Liu, Federal Reserve looking to destroy US property next to tame inflation. Honestly, yes. Honestly, yes. Yeah, the housing property market will be the next one. After stock market, it's always housing property. And once the interest rate goes up, right, the mortgage loans and all the so-called credit default swaps will start coming very sharply. And that's the reason why I felt that, right, there will be a repercussion and once the property prices goes down, you can see the whole thing will just come down very slowly, all right, very nicely and very slowly. So that's my point, that I'm still looking at the market to go down a little bit more than to really call for a big buy right now. Of course, intermittent buy is no problem, but to tell me for a big buy, not yet. All right, so yesterday, someone asked me, Cal, you have been calling for sell for so long, and obviously you guys are making some good money. Why would you call a buy yesterday? What made you buy yesterday? Now, the thing is this. Some people say that, Cal, is it because the market has been going down for a couple of days and you're calling for buy? Now, the market had been down for a few days before yesterday, right? And of course, it was near to the oversold region. But the thing is this, I didn't see what I want to see. To me, is that, right, when the market is on a downtrend and the market is still selling, even though it could be oversold on the technical, it doesn't mean that, or doesn't warrant you to buy. The only thing that warranted me to buy was yesterday when I saw the market purposely break the low and then recover. And I know that on CNBC, Bloomberg, CNN, all were so bearish. I know that when I see the price doing a reversal like this, the market will rebound. So that's the reason why yesterday I call for buy, which is a bit of a shocker because everybody was like expecting to call for sell, right? But I say no, it's a buy. So because I called for buy, well, look at it. Not bad at all, right? Students actually make good money on the long side. So it's like, people like, hey, Cal, this is a long trade. I say, yes, it's a long trade. What's the problem there? So that is why I say this MAO is right. It's for my student to get understanding that how to see the charts, how to see the fundamental, and then put them together and then follow a system to make money. So actually, I was pretty okay, right? So Dow, I'm pretty sure it was a spot on call. All right. So do me a favor, if you think that I was okay on the Dow Jones, please keep the word Dow spot on. All right. Thank you very much. Okay. So once again, yesterday we have a bit of crowd. Yesterday, more than 100 people came in, and not too bad. By morning itself, right, about 500 people has watched it, and of course they quite like it because I actually speak the truth. Okay, not too bad. Yeah. Okay. Oops, sorry. All right. So tonight CPI data will be the one to watch out for. Everybody eyes will be on it itself, right? So let's just stick with 8:30 p.m. tonight. Yeah, very important. All right, the Dow Jones, let's take a look. The Dow Jones today is what happened now. The Dow Jones was up to when the cash market opened. It was like previously it was at 32,200, right? So when it opened, right, it was up by 400 points. So we were like in great profit. But after less than about an hour or so, the Dow gave all the profits all the way. And when at one stage itself went below 32,000, yeah? That was where I shared with students to consider to buy back some position ahead of the CPI. And of course, suddenly one of the Federal Reserve official came in to talk about it and said that it's not it's like the Federal Reserve now, it's not the same like what happened in the previous time, like Paul Volcker time, whereby inflation was crazy. And also there was no credential by the Federal Reserve back then. Now, to me, it's a joke. I mean, consider the fact that, right, Federal Reserve have been calling for transitory inflation, already got no credential already. That one was really slapped in the face. Second of all, it's all right. The Federal Reserve own people when you buy stocks when the market is also going up. So they also make all those mistakes. So to me, in terms of credential, it's the same thing. The only thing is, yes, indeed, the inflation now versus back in Paul Volcker time itself, right? If you compare apple and orange together, then of course, currently now it doesn't still warrant a 75 basis point. But of course, the market just shoot up for 200 points and for 400 points, in fact, and then came back down and take profit once again. So you can see that the volatility is absurd crazy. From the high point to the low point itself can be as much as 700 points, my God. Then from here itself to this point here itself, right, can be as much as 500 points, my goodness, okay? Then from 500 points, you can come back down again to be down by another 250 points. So you can see the volatility in the market is really, really crazy. So that's why some traders tell me, Cal, you know what, I actually make money yesterday, but after that, you know, I gave back the profit. Yeah, I understand that. Because if you don't take profit along the way, you will likely give it back because the volatility is really, really crazy at the time right now. So I suggested to some student of mine, say, don't really hold it all the way. Take periodic profit and then do SWL along the way, because you can never expect what to happen in this market recently. Yeah. Okay. So what really happened to let the Dow slip for the 4th day? Because at the end of the day, it came down, right? But before that, it went up. Okay. So the thing is this: the major average struggled to bounce back after a bout of heavy selling recently. And at one stage itself, you see the Dow Jones up by 500 points at one stage, but then after that, it went down to below 300 points. My goodness. So the range itself is like 900 points. Crazy. Okay. We are in a market where you just can't hold on to any rallies. I totally agree with this statement. Okay. It's not surprising given the overall trend we've seen in the last several days, and we're going to see more going forward. I also agree on this statement. All right. The thing is this: even the very stable safe haven like consumer stapler and utility also got hit recently. So that means that it's generally the whole thing going down. All right. So the thing is that David Tepper, okay, came in and said this: no, I think that the Nasdaq is about to hold well at 12,000. He felt that, right, the market should be nearing an end in terms of selling. Now, I will put it this way to you, like I said earlier, the market is near a small potential rally for a rebound, rebound from yesterday to now, yesterday to today. I kind of suspect that today the market will go up a bit more. I already tell you guys it will hardly happen. Then after that, right, then the market will come back down again, because 8% is still 8%. You cannot run away from the problem currently right now. Yeah. So that is my personal take here. Okay. So traders who are on a short side, just kindly take note of what I just shared about today's market. Yeah. Okay. Now, of course, the Treasury yields also came off a bit, and that lightened up the position. So let's look at the Treasury yields right now. Yeah, let's take a look. Okay, hold on, just give it in. Here we go. Treasury yields. Okay, take a look, guys. Now, this is the Treasury yields. Okay, you can see very clearly. Okay, it's a very good one. Sorry, just give me a moment. Liu says this: Biden looking to remove China tariffs. Does that help to tame inflation? That will help, definitely. That will definitely help a little bit. Undeniable. Yep, indeed. Okay. So, but then again, to do that as well, right, I don't think they will do it right now with the current situation, unless China really shows that they are no longer in line with Russia. Right? If not, right, it will take a while. Unless the whole thing I told you guys all the way is bullshit. All right. All right. So this is what I'm seeing right now, guys. Take a look. Okay, just give me a minute. Okay, so you can see that, right? This is the BMB on the 10-year yield. Okay, you can see for my student, you understand this. So if we're going to put the two levels here, the high and the low, okay, and it's going to be a BMB. All right. So this range itself, let's take a look. The range is about 3.02 to 3.2, well, 1.8. Okay, so that means that if it goes down, right, the low is 302, 1.8, so about 2.92. Okay, so let me go put the level in right now. 2.92 somewhere here. Okay, this is what it's gonna be. Okay, so now I'm gonna say this up front. Based on what I'm seeing right now, it's pretty clear that there is a potential that the 10-year yield will come down to here, and the number will be 2.92. Okay, so if the market do come down to 2.92, then what will happen is that, right, the stock market will also rebound. The stock market will also rebound, okay, because of this. But the thing is, once it comes down here, if the market stabilizes, and continue its trend up again, the stock market will still be hit. Got it? All right, the stock market will still be hit. So it's going to be like this, ding, ding, dong, and then go back again. Okay, so this is what I'm seeing right now. All clear on this? If everybody clear this out, right? You key the word 2.92%. It means that if you actually see 2.92, you know that that is where we forecasted on the 10-year yield. And because of that, right, you also know that that will be a level for you guys to consider to buy back your, take profit. It means that if the market really go to 2.92, then the stock market will be higher, right? Then when you see that number at 2.92, consider to take some profit on the long side if you actually it's long. Then of course, people who want to turn short, you can actually take advantage of this 2.92 from that point onwards, right, to short the Dow Jones. Okay, something along that direction. Okay, got it? That is what I'm looking to do. I'm not too sure will you do it, but at least I'm sharing with you now exactly that what will I be doing. All right. Okay. So you notice that I'm very open with this. I share with you exactly what you should be looking out for. And at the end of the day, it's all right. Unselfishly, they say, oh, you must come for my course, and then I'll do this for you, No, I actually really tell you that what you can do in the market and stuff like that. Really wants to help. Put it this way, I really want to help you guys. Okay. Just give me a moment. Yeah, there's some messages coming in from my family side. I'm just trying to get that ready and proper. Yeah, just give me a moment. Just give me few more messages and done. Okay, so Johnny, Jonathan, Anthony, Susan, Allison, Kinghua, Sharif, Brian, all you understand, yeah? So if this you understand, good, because that means that you will be able to capture both sides of the coin if the thing really happened in this direction, okay? Yeah, both sides, yeah? Okay, thank you. All right, continue. Right, Norman also, very good. Okay, so that is the 10-year yield. Okay, I'll come back to this shortly. Okay, so for information itself, right, the S&P now went below the 4,000 mark yesterday again, and the low was 3975, and the broad-based market is down by 17% for S&P 500. Yeah, 17%. We're almost there already. Okay. So now let's look at some global news right now. The April Consumer Price Index definitely will be the one that we are all looking for. It's a very pivotal consumer price index itself. So everybody is watching this very closely. The number that people are looking at is 8.1, sorry, yeah, 8.1. So the last one was 8.5. So that means it's a kind of like a drop of certain size actually. Okay, so definitely people are saying that, right? If the number really dropped, that means that the inflation is definitely peaking. And if you're peaking, then of course the Federal Reserve can slow down their interest rate hike. Now I don't buy this at all. To me, it's all right. At 8%, it's nowhere called peak. Okay, unless like from 8% drop to like 6%, that is called peak. So to me, a drop a little bit isn't really going to warrant this. But again, traders will take advantage of this to squeeze the bears. Okay, so why the current situation now is a lower one? Because some of the energy prices are coming down a little bit, food price coming down a little bit, some of the mortgage coming down a little bit. So that is the reason why. Okay, but you can see from my own drawing as well, right? You can see this is from 1992 until now. The number is the high back then was about only 5.6. That was the average high. So imagine now that the last 10, 20 years, 30 years, in fact, the number have been low, right? And now we are at 8.3, 8.5. It will take a lot of effort for it to come down. So that's why I cannot see that one day CPI data will change the direction of the US market. But then again, there will be an intermittent rebound. This one, I'm pretty confident on this, okay? So this is why I'm saying this. Don't get smoke screen by the boys. You have to follow whatever the chart really says, okay? So now I understand why a lot of analysts now are very concerned, but to me, this concern is redundant because it doesn't really help. And interestingly, right, one lady called Anita, all right, she's a chief financial economist at Jefferies. She actually expects a hotter than consensus report with a 0.3% gain in the CPI data. Now, she's one of the very few actually give a higher number. She thinks that the market focus is wrong and investors should be concerned or more and how inflation can decline. Okay, fair enough. So to me, I don't know. I mean, I just feel that, right, she's not wrong. But like I say, Wall Street can do a lot of manipulation here and there. So to me, doesn't matter. To me, is that this even the CPI this time is lower, the next one will be higher. So it doesn't change the fact. Okay, all right. So this is interesting. I'll give you two sides of the coin. Okay, so now I told you, right, because of that, right, crude oil price came down below $100 ahead of the US inflation figures. Very interesting. It was something else, suddenly the price came down. Okay, then they say that it was because of the stronger dollar. So, okay, stronger dollar, right? Let's take the dollar now. Okay, let's take the dollar. Now, the dollar indeed is going up. The dollar indeed is going up, but it's not like going up a lot that will make the crude oil price came down from 107 to 100, right? Don't see that point. But again, this is how the Wall Street work, right? They just say whatever they want to say. So the dollar is still climbing, and I told you the dollar is still going to go up to 105 in the next few weeks, in my opinion. So if the inflation data is not so good, okay, if the inflation data really not so good, right? I mean, okay, not so good means what? If it basically is like now it's going to be 8.1 or lesser, the dollar will pull back down, because that means that the lesser reason for the Federal Reserve to hike interest rate, at least from based on Wall Street view. So if the dollar pull down, then what will happen to the crude oil price? What will happen to the crude oil price if the dollar do pull back? That means that if the inflation data is not as strong as what people think, or at least it's even come out lesser than what people think. All right, what happened to if the dollar is to go down, right? What will happen to the crude oil price? Think about this. The crude oil price will definitely go up, right? Because the dollar basically weaken the US crude will go up. So isn't that the killer over there? Number one. Number two, gold prices. Then what will gold price do? Of course, if the dollar pull back, the gold price will will rise, sorry. The gold price will rise. So which means that, right, if the dollar do pull back tonight, then you have commodity prices going higher. And then of course, the problem is this, isn't it? That's the one that killed the market in a way, a higher commodity price. So gold traders, right? Gold traders, let you see the cash market first, yeah? Gold traders. Now, gold traders, right? You can see on your screen right now that gold has been coming down for the last 10 over days, right? So in terms of RSI, which is the conventionally what a lot of chartists are using, I'll just show it to you a little bit here and there. Now, take a look. Okay, now if you look carefully, my friends, okay, the last time when the RSI came down below 30, it was on this particular day. Now watch this, guys. This is a very killer move. Huh? The gold price was trading at 1770 then, okay? And on a single day, the gold price plunged all the way down. Can I haven't see a figure yet? Okay, on. The gold price plunged all the way down to this point here itself, and that was at 1683 or $100. Okay, $100 move in one single move itself, right? Okay. Then after that, then it rebounded almost twice the distance. Okay. So now where we are now, we are about the same point. Do you see that? We are about the same point. Okay, so what happened? Let me give you a simple idea, okay? One, if the CPI data is really good, much higher, or okay, really bad, but stronger, okay, kind of confusing right now. Okay, if the CPI data is higher, simply put, higher, then the US dollar will shoot up. Then the gold will plunge further. Yes, the gold price will plunge further. There is a potential to see even 1,800 if this really happens. Okay? Now, opposite, if the CPI data is lower, then of course gold price will likely go up instead. So that will give me roughly about 1,855. Now where the gold is? 1,837. Okay? Gold is at 1,837. Now with the RSI now at the lower rank, it kind of more towards this. So if you ask me now, if we're going to follow the script, if we do expect the gold price to go higher, that means that the dollar must be weakened. For the dollar to be weakened, that means that tonight's CPI data shouldn't be higher. It should be either the same or lower. Can you understand my point? Then the whole script will work beautifully. Okay, so let's see how it goes tonight. I got no view right now with this chart of charting. I need to see my TWB chart. Then I can tell you my view on gold later. Yeah, but I got to give you a view on this. At the moment now, in terms of the traders, most of them are very bearish. You can see that this is the put call ratio. is very bearish at the moment. Yeah, very bearish. But usually when they are very bearish itself, right, likely the market may actually do some rebound. Yeah, sorry, I got it wrong. It's actually here right now. So it's not as bearish. It was bearish the day before. That's when the market rebounded. Yeah. When the market is too bearish, right, usually the market will rebound. And that's the reason why I called for buy yesterday. Okay, now this is something to take note of. Now, before the war, the crude oil already hitting 103, and after the war itself, right, the crude oil went up. Okay, so you can see right now, over the span of the last few months, the crude oil have been trying to stay above the 103 for some time, but every time it gets pressed down. But the thing is this, every time it pressed down, right, it doesn't go beyond $95. So my view is this, right, if you really want to buy crude oil and safely buy crude oil, then about $95 is where you can consider to watch for crude oil. Okay, $95 if you really want to buy it cheap, like, yeah. So end of the day is that there are still people looking for crude oil to go higher. What's the reason? Come to that. It's because of this. Now UAE Saudi Energy Minister hit back on NOPEC. Okay, NOPEC now. Okay, say that it could send oil going higher. Okay, so this is a new legislation that regulate the output. Okay. So this proposal could actually send the crude oil price up by as high as 300%. Now I tell you, this is all right. Unless something really crazy happen, I don't think or ever think that our crude oil price can be 300%. To go up by 20% already, a lot of us will be making a lot of noise. Don't talk about 300%. If there's a chance of crude oil going to 300%, I can tell you this: no one will drive. That's the put it first. And the whole economy will just collapse, really collapse. It'll be worse than pandemic, I tell you that, okay? So this is not possible, yeah? Even though this is like an idea, but I don't think it will happen, okay? And of course, OPEC now, definitely, they're not going to be like, waiting for this to happen. They will tell you this. Currently now, the OPEC nation and alliances are still off its quota by 2.59 million barrels. Why? Because Russia don't contribute, right? Suddenly is a big supplier missing, and that is 2.95 million barrels per day that's shortfall. Oh my God. So think about this. This is not going to be good because this is very concerning. So my point is I still long in crude oil. I think that you can long on it. And then, of course, if this happens itself, right, just brace yourself. Things may get even worse later. Now, not Tiger Woods, Cathy Woods. Cathy Woods says that economic indicators will start screaming at Federal Reserve as it rate hikes. So we all know that, right? Federal Reserve now is going to do aggressive tightening, and for Cathy Wood, she's definitely not happy. And she stated this: we are beginning to see bankruptcy. We are seeing credit default swaps. Yes, I told you, right? Credit default swaps will start to surface once the economy is doing well, and definitely, right, bankruptcy will start to rise. So truth be told, right, there is the problem. The interesting thing is this: Federal Reserve and team keep on saying that they're only looking at 50 basis points. But the federal fund rate, the one traded, right, are looking at 75 basis points. Don't know the market is correct or the Federal Reserve is correct, but apparently it's all right. The market is pricing in a 75 basis point, okay? And of course, this could be a global economic downturn, definitely for sure. But of course, I think for now, right, she should settle her own problem. But her Teladoc, her Zoom now has lost more than 50%. Her Roku is down by 60%. Wow, her ETF is down by 56%. And in fact, from the record high, it's down by 70%. Oh my God. So the thing is this, we are not even near there yet. Imagine now the Nasdaq is down by only 24% and the ARK Innovation is down by 56%. So imagine if they say the Nasdaq down another 5%, well, ARK may really go down to 75% and stuff like that. This is really, really crazy. Okay, all right. So she's still very confident, and she said that Teladoc will still be up by 300% in about 5 years' time. But to me, it's all right. I won't buy that right now. Yeah. Okay, so of course, when all this thing is happening, it will also spread across the world. So Tesla production lags in Shanghai due to the parts shortage, right, apparently. So with that, there'll be some supply issue and of course, delay. And when there's delay, earnings will be affected. So now definitely we have a lost month or so because of the COVID-related shutdown. So production is definitely at a very limited level. Hopefully, right, when time comes, they can go back to really work. And of course, that will translate to revenues later. All right, so some very important news right now. Okay, let me see again. Liu, got anything to share with me? Liu, do you think that DCA on ARKK now will carefully catch the bottom? Do you think this, just to confirm, what does DCA means? Yeah, just to double check. Yeah, just to double check your meaning of DCA. So, will the ETF be zero? No, lah. I mean, it cannot be zero because their ETF means you buy the share, ma. But the thing is that the share that they bought are also down to 60-70%. That's why the ETF is down by 60-70%. It's cost related. So I don't think you go to zero, but you know, if you want to buy this counter of ETF, right, you do have to take a longer time now. Last time you buy immediately, next moment you make money. But now with all the heavy baggages and stuff like that, right, it'll be harder. I rather think that you should buy the individual stock, dollar cost averaging. Okay. No, I just feel no. Yeah. Okay, let me just bring the chart to you. Easier to understand this. Okay, hold on. Okay, so now you can see this is the counter called Up Innovation, and I was so bearish on it. Remember back then. Now, when the Up Innovation was around at 130 a year, I was calling for sell. Then after that, at 120, I called for sell. At 100, I called for sell. At 80, I called for sell. All right, recently I didn't cover anymore because I think that this counter is going to hit. So yes, I believe that Up will come down to $30. I believe Up will come down to $30. I believe that Up can go down to $25. Okay, now Up highest point was 160. So now take a look here. If let's say Up, if you buy at $25 example, then of course the upside itself is rather big. But you must understand Up itself, right? All the ETF and all the counters are not performing very well, except for Tesla. So seriously, unless she revised the whole portfolio, if not those companies, right, like Teladoc and all this, right, they may survive, but they may not recover that fast. So buying ETF like this Up right now, right, it's more like long-term positioning, and that's because if you feel that way. I would rather just buy some just for the sake of portfolio and then wait for it to really bottom up. Then after that, see what Cathy Wood is going to do with their portfolio and what to put in, what not to take in. Then of course that will be some money. Okay. Yes, indeed. Yes, indeed. Judy, yeah, you are absolutely right. Very wow, right? Correct. Yeah. Remember when we're calling for this itself was at 80, right? Now it's already at $41, half of the price that we called. So once again, well, it proved that, right, our view back then was absolutely correct. Okay, thank you, Liu. All right, now at $25, can try, yes, because we're talking about really $25 out of $160 is already about 1.7 to 1.8 price. Then okay, at least is paying 50 cents, paying 20 cents for a dollar. Okay, paying 15 cents for a dollar. Yeah, something like that. Okay, so now we have the numbers, and true, we told, right, Peloton shares, so AMC numbers was actually good, but the stock actually went up first and crashed down. So all these are typical. Palantir straight away crashed down already. So all these showing it. So after that, right, Peloton also bad. OXY was flat. It was okay, decently okay. All right, so tonight after market close, the one that we are all watching for will be Walt Disney. Now, Walt Disney, you may say that, okay, this is just an entertainment company. Why so serious? Well, that is basically able to translate that if let's say people are not spending money, not going for entertainment and stuff like that, that means the economy is not doing that well, right, on its own. Yeah, indeed. And of course, we have Rivian coming out, and I tell you, Rivian, to me, is likely to go down lower. Rivian, yeah, I cannot see how Rivian can escape from here. I'm just bring the chart to you once again. Just a moment. Right, let's take a look. Yesterday, Rivian shares got a little bit of bounce around $22. All right, I don't think this counter will do any better. I still think this counter will go down below $20, and maybe we can see as low as $16. Okay, I already tell you that yesterday. Now, of course, again, if the earnings come out fantastic or come out reasonable, and then there's some buying because some funds came in to buy, it may push it up again, but I'm so sorry, the trend is down, nothing else. So even it goes up, right, it will stay long, it may down again. Now, how low can Rivian go? I put $16. Okay, really, how low can it go? In my opinion, it's 12. To me, itself, right, if Rivian is go down to 12, not too sure how would it be. Okay, not too sure how would it be. Okay, all right. So Elon Musk said that he will leave Twitter ban on Donald Trump after the deal closes. All right, he want to reverse the permanent ban because he thinks that, right, nothing wrong to put him in there. But of course, Donald Trump said that he will not return to the social network even if he had a chance. He said not going back, and it makes sense because why? First of all, he had found this thing on Social Truth. It's a new app. And he also thinks that, right, if people don't treat you well, why must you go back, right? Which I totally agree. So to him, to me itself, right, there is a potential unless something really drastically need to change over and then come over. Okay, so this is something to watch out. Yeah? Now, in case you don't ask me, right, is Elon Musk a Republican? No, Elon Musk actually is a half Democrat, half Republican. So you don't really cite Donald Trump. But I can believe that both Donald Trump and him, they have the same thing when it comes to business. Yeah, they're very shrewd. They know what to do and they really make it happen. Okay. Now, Bitcoin is the one big thing yesterday. When I was covering Bitcoin yesterday, right, a lot of people was very, very concerned for that. A lot of people are very concerned yesterday when I covered Bitcoin. Just give me a minute. Okay, wait. Moment, there's some problem in my screen right now. Okay. Just give me a moment, yeah. Something wrong with my screen. Okay. Okay. Is Donald Trump lying? I don't know. Okay, yesterday when I said Bitcoin will go down to 27,000, right, straight away, oh my God, all my friends that are doing cryptocurrency call me and say, Kel, are you sure? Now, let me just bring you Bitcoin chart to make you understand the situation here. Okay, if you don't know, let me share with you now. Okay, take a look. Okay, so this is the Bitcoin right now. Okay, now Bitcoin, as you can see, the last 2 days we have very huge trading contracts done. Okay, so the last time we see something like so big contract, the market went up, right? So big one, market went up. Okay, so big one, the market went up. Yeah. Okay, so this time around we are expecting this to happen, right? Yes. But the problem is now that the current situation is not like what happened previously. In the previous time itself, right, when there has a huge trading volume, that means the Uncle Sam is still around to support the market, but not this time around. This time around itself, right, we do not have the same support as compared back then. So in fact itself, right, I kind of believe that we are about to crash in terms of Bitcoin. I repeat, we are about to crash down. Okay, about. Okay, why? Because as you can see, first of all, the Bitcoin recovery itself is nowhere near that it used to do that, number one. Number two, very, very important fact and figure is this, all right, that there are a lot of people who bought Bitcoin recently and they're now in losses and they're not cutting their losses yet. So when the Bitcoin do come down to a certain level, right, of concern, there is a chance to see 28,000. Right, being traded. And of course, with some potential, a bit more slip up, we can see about 27,000. Now, would it go all the way down to 19,000, right? It's something that I share with you that it is possible, but I don't think so soon. So with that happening, we have a problem because MicroStrategy, Tesla, a lot of them, PayPal, they all went into crypto space payment. They buy Bitcoin for their portfolio. So I cannot believe that, right, things can get really, really damaging for them if the coins do continue to go lower. Yeah. So traders, you have to be very careful on this. So am I short in the market for this cryptocurrency? I think yes, I am, because I still think that it will come down. But of course, even though it go up, right, it will still have to come down again. Because I say when the Federal Reserve is no longer helping the cryptocurrency space, the eventual direction is still going to be down. No matter how I see it, it's still going to be down. It's just about risk management, that's all. Okay. All right. So that is my view on crypto. Okay. So now the thing is this: we have also big problem in between, right? Where the announcement from Binance says that, right, there's some problem with the Terra network, the Luna was suspended, the UST was down, and stuff like that, due to high volume of pending withdrawal transaction. I think that is the word that you must understand. So why would they withdraw? So obviously the reason is pretty clear, right? So to me, it's all right. This is no good. Okay, this is no good. Breaking below 30,000 is just the beginning. going down to 27,000 to 28,000, I think that will be the start. Okay, so traders, this is my reason for you. Okay, all right. Now you can see very interesting, the stock versus crypto, right? Now Bitcoin is down by 46%, Ethereum 42%, and BMB down by 42%. So around there, right? But PayPal, Netflix, Meta now is down by 50% to 70%. Don't understand why. It's quite scary now and making a lot of people unhappy at the same time. Now El Salvador definitely is a country and they are having losses. Now they bought some Bitcoin as for their currency holding. And the president is a 40-year-old guy, younger than me. Bukele says that right, he's buying more. Okay, so when this guy, he went to buy even more coins, 500 coins, as the price plunged below 31,000. So that is already the total amount that he has for the country is already down by 28% because he bought about $103 million worth. Okay. So as long as things settle down, the losses will be still down there. But if things have to be worse, then we have a problem. And you understand why now? Okay. So the thing is this, that will definitely hit MicroStrategy. Definitely, because MicroStrategy bought so many counters. Okay. I mean, so many Bitcoin. So let's look at MicroStrategy right now. MSTR. Now, MicroStrategy yesterday was down a little bit, okay, down a little bit, but it's higher than the previous day. So as long as because Bitcoin went up, if Bitcoin continue to recover a bit, fine. But if Bitcoin really goes down, then that means this counter is going to hit the 180 level, okay? To me, is that for MicroStrategy, it's down there, yeah? 180 level, that is something that to take note of that. Okay, all right, so that is the sharing for here. Okay. Again, got some technical issue again. Just wait a moment. Having a bit of a problem right now with my stuff here. Just hold on, guys. Hold on a minute. I need to just stop share first. Once in a while, this thing happens. I'm not too sure why. Okay, Liu, will crypto become another tulip story? I don't think so. Tulip story is a mania back then, and really people going crazy on it. We don't have this sort of craziness now, so I don't think so. And in fact, I share with you, right? I believe in 2024, the next halving, I believe that Bitcoin will see 75 to 80,000. Yes, indeed. So I'm actually looking at the Bitcoin come up to 17,000 or 19,000. If you ever come there, you can buy some and keep it for a few years. That will give you about 4 times return. Yeah, better than putting into the bank. Kelza. My staff in El Salvador says that the people there still don't understand much about the Bitcoin and the technology behind it. Many says that they are fearful that to have Bitcoin as a store of wealth. Well, let's put it this way. If I'm right, then if the Bitcoin goes down to this price of what I just say 19,000, right? That means that we are talking about whatever they are invested back then. Down by another 30%. So down at 30% will be down another $30 million. Yeah. Okay. So of course that will definitely make some people very worried. Yeah, definitely for sure. So to me, no, I don't think it's time to buy yet. Yes, I think we can buy at a lower price. Wow, FICO, you are looking at 10,666. Okay, I cannot see there. If you can do that, fantastic. Yeah. Michael, so crypto still a future? Yes, of course, definitely got future. Don't worry about the future, but it's definitely have this future. But I just said all the NFT and stuff, I think they'll get hit for time being. Right, last 3 months ago, I tell people don't buy NFT. I think that NFT is still not ready, not popular yet. It's just like, not ready yet, yeah? I give a very simple way to understand this. Okay, now we Chinese like to have steamboat during Chinese New Year time. Remember that 30 years, 4 years ago when I was still a child. But if you created steamboat restaurant 40 years ago, you likely remember that, right? There's only a couple of them that make very popular, the one in Marina Bay, right? And the rest of the heartland places, you open any steamboat places, you will not make money. If you put mala some more, right, it will never work. But then after that, 20 years later, right, when the Chinese come in, right, from China, and then they start to sprout around Singapore, and of course they like steamboat and they like mala, right? And then now you do any steamboat restaurant that do mala, right? Oh, business is very good. So to me now, right, crypto is now at which stage here? Crypto now is the stage whereby 40 years ago, where steamboat, we like it, but we don't really want to have it every single day. All right, not yet. But by 2024, when the next halving comes in, I believe that time is out, right? The Fed will come in, not federal Fed. All right, will come in, and that will propel the entire crypto space all the way up. Yeah, 2024. So of course, 2022, 2023, you can start to buy some crypto at a low price itself. All right, low price. Okay, got it? Okay. So if you can understand this, is all right. Just put it, got it. Okay, at least I know that you guys are still with me on the crypto space. Is all right. Look to buy crypto cheap in 2022 and 2023. I see big upside from 2024. Now, of course, you may say, oh, is it because of the halving issue? Well, halving is definitely one of the reasons. And there's another reason on that, right? Because if you actually goes into a deeper study in terms of like, you know, the planetary movement itself, right? 2024 is very strong metal, fire. So that will definitely bring up the entire crypto space. Technology will do very well. So that's why I felt that, right? Maybe this 2-year technology shares will come down quite a bit. And then we try to buy it cheap so that, right, we ride on it all the way to 2024 and 2025. And that's the reason why am I looking to have the crazy app ready the next 2 years so that we can ride on this very big bull. Yes, very big bull. So hopefully by then itself, right, I'm still able to do MAO with you. And you remember what I said today that 2 years ago or 1 year ago, I tell you about this and that you really take advantage of that. Yeah. Okay. Got it. Yeah. Oh, fantastic. Okay. Continue. Sorry to drag a little bit here. And of course, this Binance CEO come in, right, and say being a holder is never easy. All right, so apparently, right, this is the thing here. The company share MicroStrategy is down quite a substantial figure already, as you saw earlier, because they also they hold a lot of Bitcoin. Yeah. Okay. Now the thing is this very interesting. The chief financial officer of MicroStrategy actually says this. He says that, right, Bitcoin sinking below 21,000 would trigger a margin call on that loan. Oh shit. So that means that, right, if I'm actually right, then that means there'll be a margin call on this MicroStrategy. Oh my goodness. Yes, indeed. So of course they can funnel it the different way to collateralize it, but again, this is bad, yeah. And of course, another guy from Infrastructure Capital Management says that he expects Bitcoin to go below 20,000 by the end of the year as the Federal Reserve shrink its balance sheet, which I totally agree. Yeah. Okay. So I understand why am I short MicroStrategy? Why am I short Bitcoin? To me, so these two will go hand in hand. Of course, if Bitcoin rally, no problem. That is okay. But I kind of believe that it's not ready yet. Yes, correct. Hey, Johnny, you know 9宫. Yeah, correct. Period 9. Okay. All right. See, a lot of us are very solid. Okay, now this is something extra, but it's quite interesting. Okay, now this is actually the real Elon Musk mother. Yeah, Maya. Now, May, okay, I can't remember how to pronounce her name. But anyway, she's a fantastic lady. I watched all her documentary about her. I tell you, she's really a woman to salute. Really incredible lady, right? For what she went through in her life itself and bringing up the 3 kids itself, it's incredible. The story is phenomenal. Okay, anyway. Now, what happened? You know, Elon Musk really like to say this. When he like to say things, they don't care. Man. So he said this actually on Twitter. What did he say? Okay, now let me bring you the one that he said. Okay, take a look. Now, Elon Musk went to tweet that he will do his best to stay alive. My goodness. And he really mean it. Okay, he said that about dying under mysterious circumstances. Now, when we say that itself, right, it's actually more towards assassination. Okay. Now, apparently, there's some rumors saying that he's being threatened by Russian space chief, right, Dmitry, right, because of his space link, Starlink, yeah. All right. So there are a lot of things going on, and of course, this our dear Elon Musk tweeted it, and of course, he put that if I die under mysterious circumstances, it's nice knowing you, yeah. And of course, straight away the mother came in, the real mother came in, yeah. And of course, as a son, quickly reply, sorry, I will do my best to stay alive. Oh gosh. I don't know how to say this guy. This guy is really very unique now. Definitely, but he really good. He bought Twitter already. So there's not much changes in the stock prices. So not too sure what his idea of doing this, but undeniable, right? I'm pretty sure there are quite a few people really doesn't want him to be alive. That's for sure. But whatever he's done under to date, right? I'm pretty sure he has a lot of enemy. Doesn't matter on this itself. So hopefully he stay alive, because if he is going to be away, my goodness, Tesla is going to break, man. If Tesla going to break, oh my goodness, I cannot imagine what will happen to all the ETFs in the world. Because most of the ETF now, they're all linked, right? And they all bought Tesla as part of their stronghold for their portfolio. So imagine if, let's say, Elon Musk is not around, Tesla will just smash down to don't know what level. And what will happen to all the ETFs around the whole world? Oh my goodness, I cannot imagine, I tell you that. So, yeah. So you look at it from another perspective view, right? Really, we have to pray every day that Elon Musk is ripe and rosy every single day, because if not, it's going to be a big problem. So will Federal Reserve crash the Bitcoin as same as stock and property market, right? I say the word yes. I already told you guys this few, I believe that they will do it, yeah. Okay, they will do it, okay. So Jim Cramer, Jim Cramer says that right, market is signaling a pick up, beaten down, profitable tech name. Okay, in short, Jim Cramer says it's time to buy. Okay, Jim Cramer is saying that it's time to buy. He feels that now these companies are all now very good level, very reasonable. It's good to buy. So what do you think, so guys? Do you think that Jim Cramer is correct? Do you think that Jim Cramer is correct? Now, if you think Jim Cramer is correct, put that Cramer correct. If you say that Jim Cramer is wrong, just put that incorrect. Okay, come on. I want to see how you, that's 84 of you right now. What do you think? Do you think that Jim Cramer is actually correct now for calling a buy of the tech, this beaten down, profitable tech name? I don't think I see any name mentioned. He just it's a very general picture, yeah? So of course, we definitely know that the one that is really making money now is Tesla, Apple, Microsoft. These three of them are the one most profitable in the tech names that are really doing well. Amazon is still making money, but not fantastic. And of course, Alphabet is still okay, also still okay. So yeah, why not, right? But I still think that we can have a lot more downside to go, yeah, in my personal opinion. Yeah. Yeah, I think so, yeah. Okay, okay. Okay, so Sean says, Michael say incorrect. Okay, then Liu also say incorrect. Lionel say incorrect. Brian, you and me share the same thing. I think it'll be correct for one day. Today. Kramer is a Wall Street joke. Okay, Jason say not correct, not yet. Angel, half correct, buy later. Jim Kramer never correct. Daniel, Chick-fil never correct. Okay, my view is this. I'm just sharing with you whatever I see on CNBC and some Bloomberg terminal, and that's one thing to take note of. That quite cute though. Okay, but Santoli also says that, right, the market is a little bit oversold right now and think that the market will rebound. Okay, so he projected, at least he gave something like this. Microsoft is back to the 2018, 2019 forward price earning range. Apple is back to the pandemic time. Google is cheaper than 2018 low. Facebook and Google are still okay. And the S&P now is at 17-time earning, not cheap, but definitely be better than pandemic time. So basically, in short, right, he's trying to say is this now is a good time to buy. I agree to and do disagree. Yeah, I agree because if we compare the prices between pandemic time and now, yes, it's a much better time to buy. Undeniable fact. But if you compare to the situation we are in right now, right, we have a problem. Because during pandemic time itself, right, the Federal Reserve have been there putting the money into the system. And that's why the stock went up, right? Now the thing is this, the stock is going back to the same level, but without Federal Reserve money. That is a problem. You understand my point? The problem is this. Okay, let me just bring you one simple chart. Let's bring in this okay, Amazon. Okay, Amazon, yeah. Let's just understand Amazon. Okay, you take a look, guys. Okay, you see Amazon? Okay, so you can see now, right? What happened on Amazon? Okay. Okay, so Amazon shares, okay, in 2020, whereby the pandemic happened. This is what happened in the pandemic time, right? Okay, so that's pandemic. Okay, then after that, Federal Reserve came in and we have Amazon share going up. Okay, fair. Okay, so now what happened? Now Amazon shares came down so much, okay, to this current level now. But the thing is this, that means that we're back to almost pandemic time, right? Almost there. But the problem is now Uncle Sam is going to take away more money from the system and we are here. Do you understand my point? So if let's say that if they're going to take away more money from the system itself, right, then logically this counter can go down all the way to here, no? That means that we can see about 1,600 now on Amazon. Do you think so? Do you think it's possible to see 1,600 for Amazon? Do you think so? I think so, no? There is a chance to see 1,600 for Amazon. Because why? Because when there's lesser money in the system, right, lesser people are going to buy things, lesser buy things itself, right, for a company that's so big and so wide, and they need a lot of this, flows of buying and selling, right? This is going to be a big issue for them. Can give another one. We talk about say this Apple. Okay. Okay, so let's take a look at Apple. Now, Apple, if we compare again to Apple, Apple was still okay because you see Apple now. If we compare to pandemic time, Apple shares, this is pandemic time, and that was where it is at 80. But now we are so high on top. So even let's say now, right, if let's say Uncle Sam is going to pull the market down, right, and Apple price goes down to 138 to 130, it's still very far away from pandemic time. That means still very good. So that means that once after that, later when everything settles down, inflation is down, everything is good, right? Wow, this counter got a lot of room to go again. Can you see the difference now between this Amazon and Apple? Of course, we're talking about different company together, but I'm trying to relate to you in terms of charting. You understand my point? In terms of charting itself, right, some of the counters are not good at all. So that's the reason why coming 28th of May, right, I'm going to give you a list of stock to look out for, right, in my preview, and hopefully you will join us, like, yeah. So to me is that, right, he's saying that, okay, most of the traders now are looking at 3,800 to 3,900 for S&P 500. I'll tell you a number later on. Get your calculator ready. I'll tell you a number to prepare, okay? So the thing is this, but then again, some people think that no, there should be more selling to go. In fact, it's all right. They say the higher bond yield will continue to scream up, and definitely this is going to bring the market even lower, okay? Some say that, right, if 4062 fail to stay on, it may go down to 3850, which I kind of think of believing in that. And of course, we also know that, right, Microsoft and Apple could have big impact now because Microsoft 270 and Apple 150 are very critical support level. They cannot lose these two levels, okay? So that's how we saw Apple already, right? Let's look at Microsoft level, yeah? Apple earlier, I told you, right? Apple itself, right, this 150 is a very, very, very important level. If Apple loses this 150 neckline base, Apple can come down all the way to 143 to 138. So if that happened, the market will down by 15% from where it is. That means that the stock market at 10%, right? The whole Nasdaq can come down easily 5%. Yeah. So 150 is a very important neckline to watch out for this Apple, and of course Microsoft. Now Microsoft, right? 250 is the neckline. So I'm gonna put it there just to let us understand this better. Somewhere here. This is the neckline. Okay. So we're still a bit distant away, so not so bad. Okay, not so bad. But if it goes down to here, it's still right. That means we lose another 7%, right? So it's still not good at all. Yeah. And we do have some space, FYI. We do have some space. And in terms of my PTP student, you know, right, this is a common area and we were lower. So that means that there's a chance of Microsoft share coming down. There is a chance of Microsoft share coming down. Yeah, indeed, undeniable. Okay, so 270, my bad, it's 270, not 250. Why is it so far away? Okay, 270 is where we are right now. That means that we're looking at the market come down from here to here at 250. Okay, all right, so 270 is what the boys are looking at. I'll put it in for you guys. Okay, here we go. Okay, yeah. Okay, clear. All right, now there's some signs from Bank of America saying that there's some capitulation happening. Why capitulation? Because now recently, right, whenever they do a daily flows of their business, okay, and apparently, right, usually when the price goes down, the ETF we bought by the retailer, but apparently this time around, right, the retailers are not buying the ETF. That means that retailer already stopped buying. Yes, so that actually is a problem. So if retailers stop to buy and the funds are not buying, definitely bank shares will be affected, right? Undeniable. This is definitely for sure. So with that understanding here itself, right, there is a chance that, right, with retailer also not buying, the market is moving towards fear and potentially capitulation. So that's the reason why these investors or traders, these banks are saying that, right, maybe the stock market may really go down a bit more already. That is a problem. Because if everybody don't want to buy, right, then we have a problem, right? Undeniable. Okay, so this is all the information that you can consider and balance it, and let me know how you feel about it. But generally speaking, it's all right. This is how it looks like, yeah? Okay. Okay, so with that, let's continue and look at this one now. Everybody take out your handphone right now. Go to calculator mode. Okay. Now, apparently, according to the Bank of America, they are saying that, right, about the numbers, right? Okay. So apparently, there are people, there were about 1.1 billion, yeah, correct. $1.1 trillion coming into the system. All right, in terms of buying into ETF, from the starting of the year. Okay. So now the problem is, right, they bought the S&P on an average price of here. Oh my God, average price. Let me get clearer for you, yeah? Their average price itself is 42.74. And the best part of this is that for the last whole year itself, right, every $100 invested in an ETF, only $3 redemption. That means that $97 is still in the market. So now everybody take out your calculator right now. Okay, you just punch with me these numbers. Okay, let's just assume that the 42.74 is the number that they averagely bought, right? Okay, so now if you multiply this by 0.9, okay, I mean you do a 90% on this. You take 4274 multiplied by 0.9, you get a figure. What number is that? Yes, indeed. This number is 38.46, which is actually the same figure that most of the chartists are looking at for 13850. So why do I do a 10%? Because if you look at it from very, very normal point of view, yeah. Normally itself, right? If let's say I invest in an ETF and my average price is about 4274. Now, anything like down 1%, 2%, 3%, I still can expect. But if it's down by 5%, usually there's some rattling effect. But down by 10%, right, there will be some form of redemption going on. There'll be redemption because get fearful, right? So that's why the thing is this. If I'm a big boy and I want to really smash the market down, I will have to smash the S&P down all the way to 38.46 so that it may crater this impact whereby the funds will redeem. And when that redeem itself, right, the stocks will be released to the market and then the boys can buy back their positions. So my view is that the S&P 500 may have to go down to 38.46. Then we can see what they call the first so-called carnage movement, which will create an opportunity to buy at the same time. So you look at it right now through the S&P chart on our on the 95% rule, you will notice that you will notice that, right? See the screen right now, everybody? Can you see it? Do you see now? That, right? If the market is to fall, the market go down to 80% mark, right? This is exactly the same level here. See that? That means that 38.55 is the 80% mark, which is very in line with the cash S&P if, let's say, the market is down by 90%. So which means that, right, if you ask me, I'm pretty confident to tell you that there is a very high chance that the S&P 500 may have to come down all the way to this 38.55 level or 38.46 level for the first sell-off to be done. That means that the market must really, really come down to this particular point. Then after that, that is where the first bounce is. Can you understand this? So S&P may have to go down to 55 to 38. This is the CFD, yeah, level before the first real rebound. Now it's at 41.18, yeah. Okay, guys, really, this is something I know by saying this is not right. It's going like, oh, serious? Yes, indeed, it is that serious, yeah. And of course, and now you can see the Dow Jones, the Nasdaq, the S&P, the Hang Seng is all trading higher, right? Ah, you see, right? How come they're trading higher? Yeah, I told you, right? The market today likely will have to go up higher. I tell you already. I tell you earlier, it's not already. All right. Yeah, so this is the thing here, guys. Take note of that. Okay. Okay. That this seemingly the script is all down there. Yeah. So watch out for this. Take a screenshot of this right now. Yeah, take a screenshot of this right now, and then after that, keep it and remember this. If you want to buy into buy big time, watch out for this number. Once the S&P do cover this number, that will be the best time to buy. Yeah, that will be the best time to go into a buying mode. Okay, clear? All right, if you like this particular picture itself that I presented to you itself, right? Keyword LIKE, like, so that I know that you guys enjoyed this. Okay. So once again, you can see that, right? I don't only use my own chart view. I combine with a lot of stuff, including Bank of American numbers, and then I do a very simple, idealistic way of presenting to you. And of course, from here itself, you can see that you guys are able to, give me all the. You can see that how it goes. Yeah, quite pretty cool, right? Yeah, indeed. Thank you very much, guys. It's not easy, guys, to get all these things ready for you guys. Really not easy. I really think that I really hope that you guys really enjoy it, because really it's not easy to do all this, coming online and then present this to you. And of course, very strongly that the views and the numbers must be inside. And you know that I don't really prepare myself. I happen to see this just on the way to the office. Then I quickly just have this thing in my mind to share this with you. And when I do the numbers, right, I know that shit, we're gonna get it correct. And truth be told, my God, the number is almost spot on. So that's why, to me is that, if there's going to be any reason for me doing all this today, is because probably it's my calling to help you guys to make some money. And of course, remember this, I'm saying that if the market do go down, at that point will be a good time to look for some buying. Okay, so I'm giving you both sides of the coin, for selling and for buying. Okay, very, very important. Yeah. Okay, so kindly take note of that. Don't misunderstand me. Okay. Thank you very much, Johnny, Daniel, Louis. Thank you so much for that. Okay, let's continue. Yeah, sorry to delay. So what are the important alternate market news for today itself to share with you, right? Definitely, this is my date. All right, I'm going to have my class this coming Saturday, my basic class. Come on, guys. If you think that whatever I share makes sense itself, join the basic class so that you can enjoy it. But you think, Cal, I want to go for a premier, I want to learn stuff that really, what you're doing then of course you can go to a premier. Contact us through Facebook. We're more than happy to assist you. Okay. All right, quick advertisement. Okay, so now you can see this is the problem that we are facing since, okay, let me just bring up a chart a little bit. Then see the number of months, then you'll see the effect. Okay, this is better. Okay, so you can see now, right, since 1980 until today, 2020 already, right, 2022, yeah. For so many years itself, right, you can see that the federal fund rate versus inflation, right, is actually going hand in hand. All right, so that means that, right, if we're talking about reality basis, and the Federal Reserve now is trying to go back to reality, right, all along itself, right, the thing is that it goes hand in hand, right? Can you see that? Okay, so now we have a problem with inflation so high, we have the Fed fund rate only just beginning. So if let's say now we're going to have this happening, we look and study this, okay, we study this, the only time when there's a big difference is here, where the Fed fund rate was at the low end and the inflation was at higher end. But when the Fed fund rate goes up dramatically, the inflation comes down. Can you see that? So it actually has its impact over there. Okay, so same thing over here. The Fed fund rate back in 90s was flat. The inflation was still considered high, but you can see when the Fed fund rate goes up, right, inflation will come down on its own. Got it? Okay, so now we have a problem. How high do we need to go so that the inflation will come back down? That is the problem. So if the interest rate goes up to 5% where we are right now, oh my goodness. Right, I think the whole stock market will crash. Yeah, that's the problem. You see that, my point now? This is the problem. If the Fed fund rate really has to follow through to get the inflation down based on this chart here itself, right, to go back to the same nominal figure, then that means that the interest rate must go to 5%. But then if let's say the Fed fund rate can't go down to 5%, or it cannot come down to 5% level, all right, then that means that the whole thing will still be high inflation. Because at the moment now, the last 30 years, okay, the Fed fund, the inflation is about 5% on average. So take a look at this. There's no way that the Federal Reserve can do this. So that means there's a reason why I believe that the Federal Reserve will keep on pumping interest rate higher, because they have to do it. Because the last 30 years, last 40 years statistics shows very clearly on this. You cannot deny this chart here itself. So that's the reason why I felt that, right, we really may have to really have 75 basis point at least twice, right? At least twice to really pull down inflation. And but of course, if the Federal Reserve get to do that, oh my God, the whole stock market will break. Okay, it will definitely break. So of course, Christopher Waller yesterday came in and said, no. We have a labor market that's so hot, so overstimulated that a stock market demand is there. So it's okay. Inflation high, no worry. It's okay. I can bring it down. So because immediately he said that, right, the stock market recovered yesterday. If he didn't say this, right, the stock market will ended down even lower yesterday. And of course, at the same time, the VIX came down because of that. To me, it's a lot of BS here. Seriously, all right. Seriously, it's all right. This inflation, how can you bring it down? It's overrun. Look at the way it's moving. It's overrun. You have to bring up the inflation. I mean, the interest rate much higher. Okay, much higher. Liu, if rate at 5%, US bankrupt first. Logically, yes, because of the amount of money. But you don't forget, US can print. So if they print more than they use in a way, or at least they print more to cover back, you will still have a recovery stage, which of course will lead to a dollar depreciation. And that's the reason why I say that the US dollar, sorry, the gold price, the crude oil price will just keep on going higher. It's going to be a very scary moment, but not now. We haven't seen it yet. To me, we haven't really come to this point yet. So you can see this. This is the Bloomberg Financial Condition Index since 2015 until now. So a lot of people thought that, right, the interest rate factor going up, right, that will bring up the financial stock. No, you can see that it's coming down. The financial stock and financial condition now is actually the same level back in 2018. It's the same level whereby the Jerome Powell flip-flop to dovish after that, right? So that's the reason why I say this. The next few months, Jerome Powell will be very hawkish, but after that, it's all right, he will turn very dovish again. So it's to buy gold, to keep for longer term, it's just a matter of time. And because of that, I'm very confident that gold will go up again to above 2,000 to 2,218. I still believe in my figure. Just that now it's being kicked down the alley because of Jerome Powell and friends. Yeah. So now the thing is this, the pivotal point now is the 4,000 level. Okay, this 4,000 level, remember I told you it was a heavy gamma traded in option market. So this 4,000 level had been ding-donging the entire day yesterday. Every time you go down to 4,000, the boys will pump it up. After that, you push it up and then you bring it down. Crazy. I mean, whatever it is, the 4,000 mark is a hallmark level here. Once the market loses the 4,000 mark, the 3850 that we saw earlier itself will definitely be next. So 150 points. Let's do a simple mathematics here. Okay, one S&P point is approximately about 8 points of the Dow. Okay, remember that. So let's say now 150 points of S&P is how many points of the Dow again? So that will be 150 multiplied by 8. You will get 1,200 points. Okay, so the current Dow Jones now is at 32,250, right? Okay, so the current price now is 32,250. So if let's say the S&P really go down to 3850, right? That means the Dow Jones will go down by 1,200 points around there, and that will give me 31,000 flat. And now you understand why itself, I believe that we can see 31,411 in the near term. I strongly believe that in the near term, we will get to see 31,411. Pretty confident. Yeah, pretty confident. Yes, indeed, because of these statistics and numbers here. So, and of course, if you look at the chart, you can see that also from the Dow Jones chart, right? Okay, I'm scribbling there. Right, we are now very nearby to the 85%. So that's why if S&P is a drop, the Dow will drop and we will see this figure. That's why I'm pretty confident. But once it reaches down there itself, right, the S&P will also reach the 3850, right? Then I strongly believe there will be a rebound. Yeah, there will be a rebound unless the market just go on the free fall. Okay, so that's the reason why I want my students to join me and make money together. And fortunately, my students are all making good money now. Those who have been joining me in the group chats, they have been doing pretty good job. Yeah, they've been doing pretty good. I'm very impressed by their work, and they are making money and sending me all the earnings and stuff like that. Yep. Okay. All right. All right. Really crazy stuff. Yeah, I know that. The amount of work involved here is stuff really crazy. Okay, all right. So now you can see that's why to wrap it up, right? I mean, sorry, but I think that today we will see the CPI data down a little bit. It will happen because it's just part of the script. Then after that, the CPI data will shoot through the roof, and that will bring down the entire stock market down towards the level. Yeah. Okay. So my view is today the CPI data tonight, in my opinion, will be 8.1 in line. All right. In the most lucky 8.0. Okay. All right. That will be my view for today. Okay. All right. That's because it's just part and parcel of the whole game involved here itself. All right. So let's study the charts to wrap it up for today. Thank you very much for watching with me. Let's look at the chart right now. Okay. So let's look at the chart. First of all, look at China. Wow, impressive. Okay, look at China recovered. Now, yesterday was a BMB, right? So all my students, you know, it's a BMB. Do the computation. That means that China market will come down to here. Yay. So China market went down below the MLP recently, and then after that, now it's trying to go back again to the resistance point. The last few times China market hit China A50. Whenever hit the MA30, it always sell down. So I suspect that it will also happen again. But before it sell down, it go up first, right? So that's why I say it's a buy today. Okay. All right. So I think is that is the thing here. Okay, from China side. So it's a buy. Okay, I told you right. How high would it go? Well, it will be now it's 1,324.5, right? That means it will go up to 1,332.0. So we are talking about about 80 points. Yeah. So market will go up another 84 points. Yeah, most likely it will happen. Okay. All right. So that is China A50. Okay. Let's look at the market as a whole right now. Okay, 5-10 minutes all I need from you. Thank you for staying under now. Okay, so first of all, we definitely have a Dow Jones that have the KSI red and it's uptick. So that means selling pressure will come in again at KTR +1, +2, +3. Okay. Now today the Dow has came down to the BMB SL level -1x1. So usually there will be a bounce around here, which is happening. And now the Dow is trading above the MLP, right? So the Dow will go up, but it will not be up much. So take your handphone on standby, everybody. Now, if the Dow Jones is to go up tonight, I suspect that it will hit KTR +2. So that will be 32,000. 367. So that means that, right, if there's going to be any upside, right, it will be a 32,367. Around there will be a good level to take a short position if you think that the whole market is going to come down. By the way, a star is going to be born soon, yeah? Ladies and gentlemen, a star is about to be born soon, okay? All right, so watch out for this star. Star doesn't mean the market must come down, yeah? Star means draw the two lines and then gauge from there. It may actually create the market to go higher. So all my TWB students, stand by, a star is about to come out soon, okay? I write it down, yeah? Now at 1:20 p.m., Dow may see, will see a new star soon. Of course, only the TWB student will understand how we get this star and bombs, yeah? Okay, anyway, look up for that. NASDAQ. Now, NASDAQ is a different thing altogether. See, NASDAQ has some strength in it. You can see that NASDAQ very clearly is well supported at the 12,218. Now, we basically call for sell towards there and we make quite a bit of money over there. Congratulations for those who short sell with me. And now you must understand, my friends, KSI is red, but it's down tick. Compared to Dow, it's different. So now, if it's down tick, red means that we're buying in the market. And now you can see it's going up. So NASDAQ will likely be going up. Okay, NASDAQ will likely be going up 12,578. So you see, we are very versatile. When we call for sell, we also go for buy. You know, very versatile because we follow the chart. We don't have a view. We don't care what the market is telling us. If buy means buy, sell means sell. We don't really care that much. Okay. So watch out for this 12,578. We're about 100 points away. So likelihood we may see this happen. So traders stand by for this 100-point upside. Okay. S&P 500, very critical. Now, S&P 500 today is actually a DJDD Doji directional day. KSI is green in color and it's uptick green. So today is a buy. And of course, by staying above 39.98 MLP level, it's a buy. So today is a buy day for the S&P, at least for now, before the CPI data. Okay, so look at the chart right now on M15. Okay, I think the start will happen again soon, yeah? Okay, so you can see that the S&P came down, hit the MLP beautifully, stopped there. The boys are buying, So that's why you can see the market going up. Pretty cool, right? Okay, so if the S&P go up, right, the first resistance will be here at KTR +2 is 4020, which I think will take out very easily. The number I'm looking at for today is 4033. I think around 4033, this particular level, traders can be standby. I think a new star will be born very soon, yeah? All right, for 4033 would be the level that I think the S&P will go today, 4033. Okay, so watch out for that. Okay, stay tuned with the market. Yeah. So again, I know that some of you are coming in because want to see me calling for sell, right? No, today not sell. Today is a buy. Right, very different. Yeah. Now this is Nikkei, brilliant. Now Nikkei was beautiful yesterday. Nikkei yesterday came down so nicely. Hit the BMB -1x1 perfectly. You see that? Perfectly. No more, no less. Now, this entire downside was actually 1,000 point. You know that? This movement here is a 1,000 point movement. My goodness. And we actually shot the Nikkei all the way down, bought back at the low, and now we are long. Oh my goodness. How crazy this trading is. All right. Now, MLP is 26,077. So now it's going to go up pivot 1. And pivot 1 is a buy call, right? So that means there is a possibility that the Nikkei can go up to 26,300 to 500 level. Okay, let's see the, around there, 26,300 to 26,400 level, sorry. Okay, so 300 to 400 level, yeah, something to watch out for. Really, another brilliant trade call. All right, so if you have really followed it and you really sold the Nikkei here, and then you hold it all the way down 1,000 point. My goodness, fantastic, right? This system, really crazy system. Really predicted the level exactly at ASSL. Cannot imagine that. Okay, DAX. Now DAX, I already tell you yesterday, DAX will recover, and DAX really went up, right? So of course, I did say that DAX may have to come down to this point here at 13,266 to just wrap it up, but it didn't. So the thing is this, downside wise will be 13,266 for it to hit and recover, because the KSI is definitely for today is green and is uptick. So that means later on when DAX open, right, DAX will go up higher, and that will push the Dow Jones, the Nasdaq higher. We're about 35 minutes away from the DAX opening, right? So DAX will go up. How high will DAX go? Well, DAX will likely be going up towards here. That will be somewhere around here, about 13,795. Okay. All right. So DAX trader 13,790 to be precise. Okay. I should see this coming up. DAX to go to 13,790 later. Then after that, it's all right. We may see some profit taking. Okay. Watch out for that. Okay. DAX. Crude oil. Crude oil now, wow, 101 already. Woohoo! Just now was 100, right? Now it's 101. Fantastic. Now, why I say crude oil go up, right? If the whole economy going to be good or CPI data going to be bad, then I told you, right, if the CPI data is going to be not so good, which is bad, then the dollar will come down. If the dollar comes down, the crude oil will go up. And see, seemingly, somehow, somebody seemingly knows something, is it? I don't know. Now, KSI is red in color, is down tick, but it's red. So that's why the selling is there. So take profit along the way, my friends. Now, the first profit level that I'm looking to take profit now will be at 102.30, which happened to be exactly at my pivot one. So I believe that crude oil is going to go up from here at 101, it will go to 102.30. It will go there. Then after that, right, maybe we take some profit first and we look at whole situation again. Now, currently, the Ukraine-Russia war seemingly has come down a little bit. I don't know why. Suddenly, Putin not talking much, and suddenly it's all right. US also don't know what they're doing. So maybe everybody wants to stand down for time being. But crude oil to go to 102.30 is my target, and I believe that it will be going there. Yep. Okay. All right. Done. That's like gold. Okay, go. Okay, take a look at gold. All right, hold on. Okay, gold today. Now, if let's say there's no inflation, would that mean that gold will go up a bit? Well, against fundamental doesn't make sense, right? So for gold, I will tell you that the KSI is still red, it's uptick rate, although we have a lot of KCX signal at the bottom, but we are almost there. So kind of suspect that if let's say gold can stay above OP and cross MLP 1845, then yes, it is able to go up to here 1855. So I will say this with the KCX now, all of them at the bottom, right? Don't short too much gold already. I think gold you can consider to go long a little bit, just for the sake of trying out itself, okay? And try out to see whether gold can go up a little bit to about 1845, okay? Now the gold is at the gold now is trading at 1838, right? So I'm looking at 1845 at least, So 1845 will be the target that I see gold will go up today. Okay, 1845. Thanks, Susan, for informing us about the crude oil because of the star. Okay, let's bring it, see the star together. There we go. Yep, the star is there. So if you put the star there, you put the line on top and the one on the bottom, you can see why the crude oil is going upwards. So that's why I say that the star doesn't mean it must come down. Star can go higher one. Do take note of that, okay? Okay, so that is crude oil, gold, and look at silver. Silver is also recovering. Now, silver has finally came down to the level I mentioned, right? I told you silver will have to come down to $21.34, remember? And really, silver really come down, really? Yeah. Silver spot on, yeah, remember? Yeah, okay. So silver now has already hit the $21.34. Silver, if it cross the MLP, which is 2150, and it's a pivot one, right, it'll be a buy. So if silver is a buy, that means that, right, likelihood we will see $22 for silver. 50-cent upside, 50-cent upside on silver. Now it's 21.50, right? So 50-cent upside for silver, okay? Watch out for that. FICO, third day BMB -1 Taiwan. Talking about gold, is it? Third day already passed. Third day, oh, sorry, you're right, third day. We are third day. Will go down to here. A bit tough though. Can go down. I mean, the low can be 1.1782. It can, but I don't think the CPI will change too dramatic. So I don't think the gold can come down all the way unless there's a sell order in the market. It's not wrong. By the chart of it, it can go down to 1.782. It can go down, but I just can't figure out how it will go down to that point. Just can't figure it out. Okay. So if you want, you can look at 1.782 to buy. Yeah. Okay. All right. So done silver, Bitcoin. Let's go to Bitcoin. Okay. Bitcoin. Right, guys, Bitcoin today is a DJDD, so it's a look like a buy today at the moment now. It stays above MLP. The KSI is red, but it's declining. KCX is turning up a little bit, so there should be some buying towards 31,994. But still, after that, right, I still think it's going to go down later on. Not now, next 2-3 days maybe. But today is our upside is there, upside 31,994. It was everything up, everything will work together. Yeah, no changes. Okay, last one will be Ethereum. Ethereum also is a DJDD. We have a similar thing happening. So for Ethereum today, now it's going to cross pivot one, right? If it cross pivot one, it should be able to go higher. So where would that be? I think 25.77 will be the level that I think that the Ethereum will go. KSI is lowering and KCX turning up. So it's a buy side, okay? It's a buy side for today, 25.77. But after that, I still think it will go down a bit. Okay, guys. Thank you very much on this. Oh, silver is Omega Day, is it? Let me just double check for you. Brian. Silver. Brilliant. Wow. Yes, indeed. You're absolutely right. Today is Omega Day for this silver. So now I'm even more confident. $22 will likely be happening. So why will it be $22? So that means something they know about CPI there. Interesting. Okay, thank you, Brian, for sharing with me. As I say, we need a lot of students to help us here and there. Got to check PSC on this one here. The Dow Jones on the version 5.8 also showing that still got a lot of selling pressure. The Nasdaq one also got Nasdaq is declining, so that's why the market went up a little bit. Hang Seng still strong selling. S&P buying context is there already. That's why Nikkei also buying context is there. That's why the Nikkei also went up. So you see, with this version, it's much easier to understand. And of course, crude oil now is moving up. Yeah, crude oil is moving up. So likelihood crude oil to hit 102.30 is very high. Okay, guys, thank you very much for today. Thank you for all the way from 11:45 waited for me until now. I really thank you for that. I sincerely wish you do well. And remember this, the CPI data is at 8:30 p.m. tonight. So stand by on this, right? If you're long in the market, just take some profit before it. If you're short in the market, consider to go lighter and wait for the data. All right, that'll be all for today. Thank you very much. Okay, bye-bye.